Good morning. Welcome to our Phonic 2 class. And today we're still continue the discussion of Module 1. It is the review of accounting process part 2. Okay? So, in this module, you'll be able to categorize the recording phase of the accounting process and analyze business transactions and their effect on the accounting equation. So, for the continuation of our recording phase, we are now on the third process, and that is preparing journal to record the basic business transactions. So, based on the accounting equation, you will have to analyze transactions to business for preparation of journal entries. To do this, it's really important to recall that assets are on the left side of the equation and they are debited for increases and credited for decreases. Meanwhile, liabilities and capital are on the right side of the equation and are credited for increases and debited for decreases. Revenue and expense both affect the capital account, wherein revenue increases the capital account, therefore it is credited. On the other hand, expense decreases the capital account, hence it is debited. So, another approach in analyzing transaction is obtaining the value received, or we consider that as debit, and value parted with, or we considered as credit. This is shown in the example below. Okay. So for the exercise 1, we will have here a scenario wherein we will encounter a different transactions. And this is about the time wherein we are going to journalize the entries of such transaction. Okay, so the problem would be the So Good Grooming Salon opened for business on 31 January of 2020. Ruby Carlos, the owner, initially put in 500,000 pesos as her capital in the business. The rest of the transactions that transpired during the month are shown below. Now, the first transaction is on January 3. Remember, Ruby invested 50,000 into the business, okay? So, how we are going to journalize the transaction? So, the first thing you have to do is don't forget to write the date. Okay, so don't forget to write the date. So the date of the transaction will be January 3. Okay, so what are the accounts which were important on this transaction? Take note, guys. Since Ruby invested 50,000 into the business, so definitely the account which we're going to use is the cash and Carlos capital account. Okay, since there will be additional cash, what you're going to do, cash is asset. And the normal balance of cash is debit. Given that you're going to increase the cash account because of the investment, you're going to put what? 50,000 on the debit corner. Guys, when we talk about debit corner, that is on the right side of the corner, while on the left side is the credit side. Okay? Since cash, we're going to increase because of the investment, you're going to put or record it in the debit corner, worth 50,000. Next, another account which we need for the journalizing of the entry of the transaction is the Carlos Capital. So Carlos Capital will be written and be recorded at the credit side. Okay, guys, when you are now journalizing the entry for the next account, please make an indentation. Okay, you have to adjust before you write the second account to indicate that the second account is for credit side. Okay, so since there will be an investment which is worth 50,000, and that will be added to the Carlos capital. So you're going to add 50,000, so credit it. Okay. Next transaction. On January 4, the parlor bought small equipment on account from Mr. Sese. Okay, so the company, okay, bought a small equipment that is used for the parlor, which is worth 10,000. But the question here is, it's on account, okay? It only means they don't pay it on cash. Instead, it's on accounts payable. So what will be the items? The first one is the equipment, and the second one is the accounts payable. Now, since equipment is a part of the asset, so the normal balance of it is debit. But because we buy a small equipment, so this will be an increase on the account of equipment. So what we're going to do, you're going to place them at the debit side. Okay? Next, because we bought the small equipment on account, so definitely it will be a liability for the company. So what you're going to do, since accounts payable is part of the liability and the normal balance of it is credit, and if you want to increase the accounts payable, which is part of the liability, what you're going to do, you're going to credit it. Credit it. So that means the accounts payable will be increased, worth 10,000 pesos. Okay? So take note, when you're going to journalize the entry, use indention, okay, for the second item. Just like, for example, accounts payable, before you write down, make an indention. Next, on January 5, the salon bought mirrors, prefabricated counters, and stools which worth 400,000 on cash basis. In this case, this is now what we call office furnishing, or we can use a furniture item account. So the furniture account is a part of the asset, wherein remember that the furniture is the normal balance of it is debit. Okay, and if you want to increase it, you will put it on the debit corner. So given that you bought a furniture, so it will be additional to your company's asset. So how much is the value? 4,000. So you have to debit it. Okay. However, you pay for the furniture on cash. So definitely the cash will be decreased. So what you're going to do, credit it. Okay, so these are the two accounts which is very important to journalize the transaction. That is the furniture which you bought and that will be added to your assets. So you have to debit it, but you pay for it on cash. So definitely the cash will be decreased and you have to credit it. Next transaction. On January 9, the parlor paid 60% of its account in transaction 2. Remember guys, our transaction 2 is that we bought a small equipment account, okay? So you have the accounts payable worth 10,000 pesos. However, you just only pay 60% of it, of the 10,000 you have on account, okay? So what you're going to do, so equipment on account, which for 10,000 times 60% of it. So only means you only have to pay the 6,000 pesos. So accounts payable, the normal balance of it is credit. However, you're going to decrease it because you are going to pay that account. So you are going to debit it because you want to pay for it. Okay, you want to less your liability. So accounts payable, you're going to decrease it, so debit it. Okay, worth 6,000. So you want to pay for it on cash, definitely you're going to credit your cash. You're going to decrease it, so put it in the credit corner, worth 6,000 pesos. Okay? Next, on January 14, the salon gave a promissory note to Mr. Sese because you want to settle the account, but then again, you issue a promissory note. So definitely, you're going to decrease the accounts payable worth 4,000, so debit it. But because you issue a promissory note, we call it notes payable. So the notes payable will be going to increase and you have to place them at the credit account. Remember guys, notes payable is part of the liabilities. And since you want to add and you issue a promissory note, definitely you're going to increase that item or that account worth 4,000. But because you pay for it, okay, because you pay the you want to less the accounts payable, so you have to debit the accounts payable worth 4,000 pesos. Okay, next. January 18, Carlos, the owner, took 1,000 cash from the parlor for her personal use. So definitely when we talk about took 1,000 cash, Carlos already withdraw 1,000 pesos from the parlor, from the business. Again, for his personal use. So what will be our account? Carlos withdrawal, which is worth 1,000 pesos, and the cash worth 1,000 pesos. Now, Carlos withdrawal, automatically you are going to less the capital of the business because Carlos took 1,000 cash for his personal use. So they call it withdrawal. Okay, how much? 1,000. So how are you going to do that? You have to debit it. Debit because you want to decrease the capital. So definitely use withdrawal and then debit it. Next, the item, the cash. Since you withdraw 1,000 pesos with the use of cash, then you have to less the cash. You're going to credit it. Okay? Credit because there will be a withdrawal of cash worth 1,000 pesos. Next, another entry of transaction on January 18 is that the salon rendered her styling and makeup services to customers for cash, which worth 2,500. So definitely you have sales, okay? And that will be additional to your capital and also to your cash. So the account we're going to use is cash and service income or sales. Okay. So cash, you're going to debit it because it is the additional money which you've earned from rendering what? Hairstyling and makeup services. So you're going to do debit cash worth 2,500 and credit service income sales. Remember, guys, when you talk about service income, this is part of the equity. And this is additional for the capital. So you're going to credit it. You're going to increase again your sales. So it's a 2,500. So credit it. Next, another entry for the January 20 is the parlor paid salary of the beautician worth 800 pesos. Now, remember guys, when you talk about salary, this is part of the expense and you have to pay for your employees. So definitely, since salary expense is you're going to increase it and it's part of its normal balance as debit, so you have to debit it. But sad to say, you pay your workers on cash, so you have to less your cash worth 800 pesos. So what you're going to do with the cash, you have to credit it so that you're able to pay for the salary expense worth 800,000. So at the end of this transaction, it's balanced. Salary expense is 800 and the cash you credit is 800, so the balance is 0. Okay? So this is the end of the transactions. So you have to think it, guys, that each transaction is very important that you need to consider, especially the items. That's why it's you have really to think, analyze before you finalize each transaction, and you're going to write them down on the account ledger. Okay, to finalize it. So remember, when you're going to post it now to the ledger because you're done with journalizing each transaction. So the process of transferring recorded transaction from the journal to the ledger is what we call posting. Okay, so the ledger shows in one place all the changes, just like the increases or decreases for a particular account. So like what I said before, that you have the specific ledger for cash, specific ledger for equipment, receivables. For the liabilities, we have the accounts payable, the notes payable, because in order for us to track what's going on that certain account, okay? All entries from the journal are posted to the various accounts in the ledger. Therefore, the final balance of each account can be determined immediately. This is the reason why ledgers are called books of final entry. So once you're done doing the journalizing entry, it's about time posting to the ledger. And once you are now on the stage of posting it to the ledger, definitely you can call it now the final entry. And this is now ready for the summarizing phase. Okay? So, the account, this is the simplest form of the ledger, and it's normally being used in analyzing accounts instead of the actual ledger. Now, just to simplify, okay, the posting to the ledger, you can use the T account, okay? So this is one of the example of the T account. So given we have the exercise number 1 a while ago, so we did is just we collect all the transaction for this particular account. Let's take it for example. Let's focus first on asset. Okay, the asset we have here, the cash, equipment, and furniture. These are the items shown during or appear during the transaction. So what we did is that cash, we put all the transaction for cash on January 3 and 18 because they are debited. Remember guys, when we talk about the account, when you look at the left side, it means it's a debit corner. Okay? While on the right side, we call it credit corner. Okay? So everything on the cash being debited, you are going to write them on the debit account. So that will be a summarization. Let's take it for example, on January 3, that transaction was the investment of Ruby worth 50,000. Okay, so you're going to place them at the cash debit corner. That is what we call the T account ledger for cash. So on January 18, this is the service income. So additional cash. So you have to write it down on the debit account. And the rest will be the transaction you've placed for the credit. There you go. Just don't forget to write the date first before the amount. Why? Of the transaction. Because for you to easy to track. If in case you will do the trial balance and the transaction is not balanced at the end for both debit and credit part. Okay? So it's easy for you to track the transaction. So don't forget the date and the amount. So at the end, you're going to add for the debit corner and also for the credit corner. And then less. Let's take it for example on cash. 52,500 minus 11,800. So the balance, you're going to put the balance where is the normal balance of the account. Let's take it for example. The normal balance of cash is on the debit side. So you're going to put the balance on the debit side. How much? 40,700. Okay? So this is already an example of a T account, which is designated for a particular account. So each account should have a T account ledger. Okay? Okay, if you're going to notice, it's a T account. T. Letter T, right? Because you're able now to separate the debit account, the debit corner and the credit corner. For the equipment, we have the transaction on January 4 and it's being debited. So definitely, you only have to write down the January 4 transaction on the debit side worth 10,000 and the balance is 10,000. Same with the furniture, you have only transaction on January 5, which is 4,000 additional. Okay, so you have to put it down on the debit corner and then the balance is 4,000. How about in liabilities? So if you're going to look at the liabilities, all the transaction being debited for the accounts payable because you want to pay for and you want to decrease it, that is on January 9 and 14, you have to write it down there on the debit corner. On the credit side, you have the January 4, which is a 10,000. So you have to less them. So 10,000 on the debit side minus the 10,000 for the credit side. And then don't forget the balance because the normal balance of accounts payable is on the credit. So you have to put the balance on the credit corner. And the answer is, the balance is 0. So definitely your accounts payable, you don't have any existing accounts payable because you already pay for it. Okay. However, on the notes payable, because you issue a promissory note, so definitely the transaction only you have is on the credit side. You credit the notes payable, right? Remember? So you don't forget to write the date, which is January 4, and the amount. So the total balance for the notes payable is 4,000. And don't forget to write the balance on the total balance on the normal balance of it, which is the credit corner. Okay? Next, for the capital, okay, you have only transaction January 3, which is the time when Carlos invested 50,000. So definitely the balance for the credit side of capital is 50,000. Next, Carlos withdrawal. Remember guys, Carlos withdraw or took 1,000 from the parlor. So definitely it will be on the debit side. So you just have to place, okay? You just have to copy and then paste it on the debit side of the Carlos withdrawal, which worth 1,000. So the balance of it is 1,000. Sorry for the typo error. So it should be 1,000 pesos, okay? Next, for the service income, we have here for the sales, we consider sales, which is we only have sales on January 18. So definitely the balance of it will be on the credit side and it's worth 2,500. Last, for the salary expense. Remember guys that the normal balance of salary expense is always on the debit corner. So we have only one transaction for the salary expense and that was January 20 worth 800 pesos. So the balance of the salary expense will be 800 pesos. So definitely this is now the example or the overall example of a T account ledger. Okay. Simplify the transaction. So for the ledger, but some businesses have its own specific ledger or a book of ledger for each particular account. Okay. So for the references of our discussion for module 1 part 2, so this is the book. And please, you should have your book by next week so that we can able to scan for our next discussion. Okay, so if you have any question, please write them down on your note so that when we will have our synchronous class, we can you can raise them everything and we are able to assess those questions and we will about to answer it. Okay, so this is the end of our discussion and thank you for listening. Happy learning.